story in the markets today is oil, and the fact that oil is breaking below $70 a barrel. Now, it remains to be seen whether or not it's going to hold below that level, but since the April highs, oil prices are down over 40%. And this has significant ramifications for the market, for businesses, and for consumers. Stocks are up across the board, led by gains from the Nasdaq. Nasdaq is up 2%. That is due to Micron earnings, but oil prices are helping. The fact that oil is continuing to fall is bringing relief to the markets because it reduces the chance of a Federal Reserve interest rate hike. There were some people talking about the Fed raising interest rates as early as September. And with oil prices moving consistently lower, the pressure is off for the Fed to act preemptively because inflation is more downside risk than upside risk right now, and gas prices should be responding to this decline in oil prices. We also have gold prices that are kind of stabilizing after the recent decline. You're not going to see gold prices push significantly lower if stocks are not falling significantly lower. So we have a risk-on mood in the markets today, and that's helping to stabilize gold prices. The US dollar is up across the board. Look at this move in dollar yen. This is the highest level that we've seen dollar yen since, let me minimize this, since basically July in a year. In 2 years, since July 2024. This is knocking on intervention territory. We heard from U.S. Treasury Secretary Bessent earlier in the week, and he basically suggested that there could be more coordination between the U.S. and Japan on intervention, especially after the Bank of Japan raised interest rates. These are the levels that they may want to come in at. So the intervention risk is high, but the dollar rally remains relentless. It also remains relentless against the Canadian dollar. Look at this remarkable rally in the Canadian dollar. Now, of course, this is due to the weakness in oil prices and the problems in Canada's economy, but these moves are getting very overextended, very tired. Gold, euro itself is down because we had weaker German consumer confidence numbers. Dollar is strong, oil prices are weak, stocks are recovering. That's the story of the day, and a large part of it is driven by the move in oil. So continue to watch oil. If it stabilizes here, you may start to see different moves in or exhaustion corrections in equities and currencies. But until then, if we get to 65, then the party may go on. I'm Kathy Lee with BK Traders and Prop Trader Edge. Have a great trading day.